Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. Hopefully, you've all had a triumphant Tuesday. This is going to be our daily cryptocurrency market update, and we've got some really interesting things to share with you. We're going to be talking about the current structure that we're seeing for Bitcoin and what I think it's going to lead to. You know, this is not typically bottoming structure. We're going to talk about that. I did tweet about this earlier, so for anybody who's not following me on Twitter, definitely worth heading over to Twitter and giving me a follow, because I think we're essentially in a ascending broadening structure. And given the kind of performance that it's had within this structure, you know, we had a trend line that we were adhering to. We've watched the trend line break. Many of your altcoins also have big trend line breaks. We've been short since last week, and we'll look to add to those positions as we see further downside coming. But essentially, given how you performed here, you know, the bias is that you're going to break through this lower sort of trend line that is the broadening structure and see that further downside continuation. So we will cover the technicals. We're going to look at a little bit of crypto news, because there's some good crypto news, there's some bad crypto news, really. And nobody's more bullish on the longevity and long-term outlook of the cryptocurrency market than me. You know, I do believe that this is a new internet. It's the internet of value. I really do believe that. And I think that this is akin to the internet, to the railroad industry, to the motoring industry. You know, I think it's that big of a deal. And there's teething problems within that. There's skepticism, there's doubt, there's, you know, all sorts of things. There's boom and busts before you get to that kind of promised land. And that's where I think crypto's going. But for now, we have to deal with the harsh reality of the situation that we're in. And that situation, in my opinion, hasn't changed, ladies and gentlemen. This is an interesting tweet from, I'm not going to try and say his name. My German is not that up to date. Oops, German benchmark electricity price jumped 25% on Monday to pass 700 euros per megawatt hours for the first time. The level is about 14 times the seasonal average over the past 5 years. So this is what you've got to think. Now, this isn't just Europe or Germany in this case. This is many other countries out there. We know that the US have strategically been dumping oil. Their oil reserves are showing this. You know, I pay attention to so many different things, and my Patreon members get an update with me twice a week talking about all of these things, because there's a lot we've got to pay attention to being in the crypto space. As an active trader, somebody who is consistently in trading, you know, trading is becoming more and more my full-time job, one of the most frustrating jobs and hardest jobs I've ever had to do, and I've done many jobs out there. Getting a bit sidetracked now, but the reason that I continue to show all this is not because I want to depress everyone and I want to kill anybody's ambitions and dreams, but I want to show the reality of the situation that we're in, make sure it's very clear that crypto hasn't been in this kind of a reality before. We'll go on to an article from Morgan Stanley, which actually, the face of it seems quite bullish. But when you kind of unpack it, it seems that, you know, your institutions are now out, basically. They've flown the crypto space and aren't looking to rebuild their positions. We've maintained that this is not a bottom. This was the generational start of the new bull market. Forget what you guys on YouTube and Twitter are saying. You'll become a far better trader and a far better... And it kind of sounds counterintuitive as I sit here doing a YouTube video for you guys. You'll become a far better trader and investor if you just, you know, do your own due diligence, and come up with your own analysis rather than listening to people calling the bottoms that have been calling the bottoms since 69k down. We were a part of that up until around about 45k, and then we switched our narrative and kind of said, okay, there's bigger forces at work here. But essentially, you know, this is echoed. This is hunker down. The energy crisis could last a decade. Now, I'm not so sure about that. I'd like to think humanity and human beings can work out sort of shorter term solution. The next 5 to 10 winters will be difficult for Europe, warned Belgian Prime Minister. Europe gas and power prices surged to records today amid Russian supply cuts. So there was also an article talking about the fact that Russia are going to shut off their pipeline to Germany, and how this would cause a reaction from the UK. I was reading an article on that, but I don't want to dive into that. And this is when people look at markets on face value, okay, and they look at interest rate hikes, they look at all these things that drive markets. They're trying to price things in. And one reason we've had this rally is because of repricing, short coverings, a number of other things. But what I think many people aren't pricing in right now is the risk factor. the black swan event factor. And that could, we're on eggshells right now, really, globally. And that's one thing that I genuinely think about. And it's why, when I ask myself, and you guys know that the market's been pumping, some altcoins are 100+% up. You get lots of people kind of going, I told you so, even though the majority of these people have been holding from 69k down and they've seen a slight bit of profit and now sort of gone, heroes all of a sudden. But the reality is, when I ask myself the question, is it worth putting all my money back into the cryptocurrency market right now? Does the reward outweigh the risk? The answer is still very much no, given everything taking place. We also have the Ukrainian Independence Day, which I think is on the 31st of this month, I believe. Yeah, 31st of this month. Going to be interesting. I'm not saying that anything is going to happen, but just something to watch along with everything else going on. We've also got the Fed speaking, and we'll dive into the technicals in a sec once we've got sort of the news and everything out of the way. We've also got the Fed speaking on Friday at Jackson Hole. That's going to be interesting. Markets may even see some relief from it if Jerome sort of teeters around and goes, oh, well, we saw lower CPI print, blah, 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 lies. But this was an article from Morgan Stanley. So Morgan Stanley says tightening in the crypto market has paused. While the market cap of stablecoins, an indicator of crypto liquidity, has stopped falling, demand for leverage has yet to start recovering, the bank said. So this is one thing you got to think about with the DeFi sector. A lot of the opportunities in DeFi come from arbitrage, right? So you could borrow some money at 2% interest, you could take it, put it in the DeFi space and earn 8% interest. Free money, basically. The problem that you've got, and this is why I think, many of these arbitrage issues are now getting culled, is because money itself is becoming more expensive. The main driver of markets is money, of course. Sounds very self-explanatory and stupid. But what kind of a bullish outlook does that leave for the DeFi space if those arbitrage opportunities are somewhat disappearing? And not only that, if the actual tokens and the kind of DeFi protocols themselves are kind of coming under question. So while the market cap of stablecoins, blah, 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 we read that. Institutional investors have stopped redeeming stablecoins, and the coin's market cap, an indicator of liquidity in the crypto market, has stopped falling. Even so, there appears to be little demand for positions to be rebuilt, Morgan Stanley MS said in a research report Friday. Last week was the first time since April that the market cap of cryptocurrencies whose value is tied to real-world assets such as gold or national currencies didn't drop on a monthly basis, according to the report. While it is still 20% below the peak, this may be a sign that extreme institutional deleveraging appears to have paused for now. So we've seen lots of deleveraging in the crypto space. This article at face value seems bullish, but what it's saying is your institutions have essentially left the room. And they don't seem to be rebuilding their positions yet. So, would the institutions not be FOMOing in here? FOMOing into the S&P, FOMOing into all these markets? You've got to remember we're in the summer doldrums, ladies and gentlemen. Summer doldrums. So markets have seasonal effects. September, which is the month we're moving into, by the way, is an extremely bearish month typically. On balance of probability, if you go throughout history and look at every September, it's typically a down month, whereas August can be a good month along with July. But typically September is a bad month. And right now we're in the summer doldrums. Crypto volumes are down 55% according to CoinShares. So the thing with this is it doesn't take a lot to actually move markets when the volume is low. So markets, there's a battle between buyer and sellers. When the buyers overwhelm the sellers, the price goes up. When the sellers overwhelm the buyers, the price goes down. That's simple. If you have $1 trillion in market cap, or that's a bad analogy. If you have, let's say, $100 of buyers and $100 of sellers, you're only going to need $110 of buyers to move the price up. Whereas if you've got, the larger the volume, the larger the amount of money, the more that's needed to move it in one direction or another. And the fact that it's low volume only takes a few big players to move the market in either direction. It's one reason we've had this pump. The issue is that works both ways. It's why this dump was so severe and harsh. We shorted it. I post quite a lot of stuff on my Twitter. And also, for my entries, it's going to have to be a Patreon thing. But it's not for everybody. The issue is this structure that we're currently in, doesn't fill me with great amount of confidence. You know, this is not typical bottoming structure. This is more of an ascending sort of broadening structure that, you know, you fail here. Natural that you're going to get a bounce here. This structure is kind of validated because of this. Because you've ran into this in this sort of lower trend line. I would have expected a little bit more of a pump, bit of a scam pump that I was looking to short. We'd actually added some shorts here. We'll see what happens there, but we will look, certainly if the price does try and reclaim some of these levels to, and we didn't actually have a retest of this trend line, although I don't think you're going to get one. I think many people are looking for that before we get that continuation. But this looks like a sick pup to me, how it's kind of holding along here. You can see that the lows are being respected if you look at the wicks. But ultimately, I think this is a matter of time before you see that downward continuation. The fact that you supported here, but haven't sort of took a lift off from it and are showing a very sort of sickly market or sickly Bitcoin at this point, leads me to believe that you're going to see that continuation. Get the comments every day going, okay, congratulations for those guys that bought in June. Yep. If you managed, by the way, and I'm not a hater, if you guys are making money, I'm a happy boy. If you manage to capitalize that and get that 42% gain, if you're using leverage and trading the futures market, potentially a lot more, well done. But don't think that this is a investment hodl environment where this is the bottom and you're right and you're now going to see that continuation. You could be right, but we'll see. I'm not right yet on this being more downside until it does make that. This sort of validated us somewhat, but we've still got a bit of a way to go. You know, ultimately we do think that over the next, 3 to 6 months, it's not the most positive outlook until something drastically changes. We'll know when that change happens. We'll see it in the volumes. We'll see it in markets generally. What happens when people get back from their sort of summer, feet behind the desk and actually start to look at these markets? Some bullish news is the fact that we actually have governments around the world really coming up and looking to regulate this market. Now, I'm bullish in some ways on regulations. I think regulations are also going to be a hindrance. It's something that we can't avoid at the moment, I don't think. And I think regulations actually are going to spur on the next wave of adoption for the crypto space, certainly in regards to institutional. We know that BlackRock, people are very worried about regulations, and there are definitely going to be casualties as a result of it. But the fact that BlackRock are the main custodial and involved in the crypto space with JP Morgan, with all these big hedge funds and institutions, the biggest in the world, go and read the Wells Fargo report, is an extremely bullish sign. And that makes me very, very bullish on the crypto space. And this is what I mean. Yes, okay, likely we see that more downside. Do we get a pump first and then get that downside? Potentially, quite probable actually, given where you are. Or we can just roll. But there will be a bottom to this market, guys. The thing for me is it's just not yet. This is still, and we continue to reiterate this, very much an intact downtrend. Using your most basic indicators, RSI. No divergences there. Potentially, you could say there's a divergence on the accumulate and distribute index. And potentially on the money flow index. But it has to hold. Realistically, it could come up to something like this and then come back down. This is not typically what I want to see for a bottoming structure. But we'll see. So that's really all I've got for you in this video, guys. Ultimately, this is a structure that I think is to be watched, is a particularly dangerous structure that, is likely going to lead to more downside. It's not like this is not sort of structure. The better scenario would be if you had something like this, where you're doing something like this for the crypto market. You come up, you get that rejection, and then you go. Rather than you doing the kind of opposite of it, pointing to weakness, generally, how you've kind of exhausted yourself here, and then you've fallen through. You've actually respected this trend line, kind of validating the overall pattern, and now it's ready to see what way it goes. But that's my bias. Lots of other things going on. Mining. So this is another interesting thing. Mining in Iran. Essentially, I think the energy story, given how bad it is, and the cryptocurrency market and certainly Bitcoin mining market are really going to collide, and actually there's going to be a bit of a fight taking place there in regards to people going, oh, it's a waste of energy, we need the energy, blah, blah, blah. so on and so forth. That's really all I've got for you guys. So the main takeaways is watch this structure. You know, if it breaks, expect some sort of a pullback here. We've already seen some sort of and by pullback, I mean draw up basically, because, you know, the pullback is in the context of this is a downtrend and a pullback from that trend. The kind of interesting thing here is it's not been a significant sort of rally. May get it. We may get some sort of a scam pump. You know, you may even come, very unlikely that you come back and retest this, okay? But you may sort of make your way up, let this creep down, and then get that continuation to the downside. That's quite a likely probability, but there is also the probability that you just spill out of it. But watch this structure, watch this trend line, see how it's respected or not respected, and kind of go from there. All I've got for you in this video, guys. If you enjoyed the content, like it, appreciate loads of comment, and I look forward to seeing each and every one of you in the next YouTube video. Thanks a lot for watching, guys.